Welcome back, guys and gals. It's about that time of day again, 7:30 a.m. Eastern Time, Monday through Friday. Welcome back to our live crude oil morning prep. Every morning we're going from the trading screens here in Los Angeles all the way across the country to the trading floor in New York City on the NYMEX exchange. A very unique and very powerful way to start your day. My name is Joseph James. I'm a technical analyst from SchoolOfTrade.com. We run a live trade room every morning at 8 a.m. Eastern Time. Come out and join us there anytime you'd like. And of course, I got my good friend, my colleague and partner of crime, a fellow School of Trade member, my good buddy Marty Errico here from Traders Audio. Marty and his partner Jeffrey, they do a great job every morning at 8:50 a.m. Eastern Time, broadcasting live from the NYMEX trading pit. Very, very good broadcast, especially for all of our screen traders out there. And today we're going to go from the screen here to the floor, starting with the trading screens first. I'm here in Los Angeles. I'm a technical analyst. I'll be starting with a top-down approach this morning, which means I'm going to use multiple time frames. Slower time frame first, faster time frame second, trying to analyze what happened overnight, analyze what's happening coming out of London. Now, we're trading the U.S. morning session, so we're focused on what happened with the previous trading session, which, of course, would be London. So we'll be looking at that overnight trading session. What I'm trying to do is I'm trying to anticipate direction at the open, because if I can anticipate direction at the open, I can find high percentage trading opportunities starting as early as 8 a.m. Eastern Time this morning. It's quite simple, guys. Start with the slowest time frames first, work your way down to see what happened overnight, look for that direction at the open, find those major support and resistance levels so you can find those high percentage trading opportunities at 8 o'clock this morning. Relatively easy plan of attack. Now, when I'm done looking at my charts, I'm going to toss you all the way across the country to the NYMEX exchange. I've got my good buddy Marty Errico with his feet on the ground looking at market direction, intermarket divergence, market internals, option prices, and those always important and often elusive, those pit session trading levels. We'll be paying close attention to those when he goes over those to wrap up the call today. All righty, so now you know the plan. Starting here in Los Angeles, let's get the layout of the land this morning. Let's plan our day today. Most important thing we can remember today is today's a Red Star News Day. Let's head right over to the blog right now. And of course, on our trading blog, over at sidewaysmarkets.com. We get a morning prep there every morning. Head over to sidewaysmarkets.com, and of course, while you're there, check out the crude oil squawk and prep. That's a link you can easily find there. And of course, once you're there, you'll find all of our crude oil charts, all of our commentary. And I'm going to begin today here with a look at the news. Very easy news report today. Remember, we always start our day by asking ourselves, what day of the week, what week of the month, what month of the year? What do we got? Thursday, right? What is it? Second week, August. All right. What's a Thursday? Thursdays are always notorious for what? Jobless claims, baby. Jobless claims. Every Thursday morning, jobless claims. Only time we don't have jobless claims on Thursday morning would be when we have a holiday on Monday, Tuesday, or Wednesday, right? Or a holiday on Thursday, of course. But we know that jobless claims are pretty much standard issue on Thursday morning. So we know everybody will be watching here this morning. We also know it's the second week of the month. The second week of the month. Now, there isn't much value in that. Well, I mean, there's value, but there's not much of a clue hidden inside that. If it was the first week or the last week or the third week of the month. The third week of the month is OPEX, right? Nothing there. So no second week of the month. No need to worry about the second week of the month. And then what about August, right? What week of the month, what month of the year? We're in the month of August. August is a summertime month. As we continue to remind you every morning, a summertime month will be marked by inconsistencies in volume. There will be 1/2, 2/3 of the volume that we normally see. The month of August is notorious for being inconsistent. The month of August is notorious for being lower volume, right? Mainly because most of the market participants are doing something else, right? They're vacationing, they're doing something else in their summertime. There's nothing wrong with trading the month of August, but you must be aware we're going to get fewer opportunities. We're going to see less consistency in the volume, which will result in less consistency in the price action. So We're not going to shy away from trading today. We know the month of August will be a little bit tricky at times. That's why we come together every morning in our live trade room and watch that market personality closely. Now that we know the scenario today, the big deal today is jobless claims. This is a Red Star news event. A Red Star news event tells me more volume, more volatility, more eyes and ears are focused on this report. Anytime we have a Red Star news event, we expect big ranges. We expect big opportunities. We expect a pretty darn good trading day. So whenever we see these Red Star news events, we tend to get a little bit more excited about the day, right? Hopefully you are too. Jobless claims have been the lowest levels they've been in years, guys. These jobless claims numbers are very, very encouraging for the USD. Will be very, very encouraging for the consumption of crude oil. So we'll see what happens here coming out at 8:30 this morning if that trend continues to the downside with jobless claims. Now, let's jump right into some charts. Looking over here at crude oil futures, the 913 contract, this is my anchor chart. The goal of an anchor chart, okay, the goal of an anchor chart, which is the slowest time frame. The goal of the anchor chart is to find two things. One, direction. Two, support and resistance. That's it. I'm not using my anchor chart for much more than that. As you can see here, I've located some very easy to find and I think to be the most important levels of support and resistance on this chart. First of all, if we take our major swing low to major swing high, we get our 103.99 to 103.37. If you're a member of mine, we call this the trigger zone number 2, right? Trigger zone number 2. 103.99 to 103.37 will be a support zone, although if we get below 103.99, we'll have some room to get short down to 103.37, although it will be a support zone to worry about there. We can also see here that we have our symmetry support right about the big round number there at 104. Big round number has already been tested today, while 104.01. We've made a few inches away from 104 even. And of course, that symmetry comes down from the major swing high now to your medium ABCD. Okay, so we've got the symmetry support here as well. So we can expect to see some serious support sitting here at 103.99 and 104 even. What does that tell me? Well, the direction of this is clearly down. Very easy to make that determination. So as we have the trend moving lower, we know we're basically butting our heads against this wall at 103.99 and 104 even for the symmetry support. So the anchor chart tells me direction. What direction are we going? We're going lower. Anchor chart also tells me where we have support and resistance. Where do we have support? 104 even, 103.99, 103.37. Oh, the trend line below us, right? You can see this kind of channel that I drew on here. That trend line at the low will provide us with support. Where's resistance? I see resistance overhead at the top of the trend line, 104.96. 105.34, right? And the list goes up. So we have plenty of support. We have plenty of resistance. And of course, at this time, our direction being down, we know that we want to sell short, but we know that we may also have a difficulty now finding some consistency getting in below that 103.99. Now, the tough part here is that we have this trend line, because what's likely to happen, if I zoom in here, what's likely to happen here is we're likely to do a lot of this. We're likely to get a new lower low down to the 103.90, hit the low of that channel, bounce, try it again, bounce, try it again, right? And that type of price action can be difficult, because what happens is if we try to sell short, we only get a little bit of profit out of it, right? It bounces really high because of all the support, bounces me out of my short trade. I, of course, either make a little bit of money or I lose money. I try to get back in again. You can see that's the type of scenario that can be challenging when we're selling short into the lows of a bear channel, right? The lows of a bear channel. The ideal scenario today, is that I would like to be a short-term buyer at these lows. So yes, Jimmy, buying the 104. But ideally, if I can sell the highs of this channel, that's the home run trade. The home run trade comes in at selling around the 104.50 area. All right? So Jimmy, like I just said, buying short-term 104. Okay? Don't know how long that will last buying that 104. The home run scenario today is waiting for the bounce off 104, looking for the reversal, and then getting it short. The reason I say that is because you've got all the support at 104, so we'll buy the bounce, right? Again, short term, a little bit higher risk buying right now, but that's an opportunity. The best trade, though, will be getting back in with the long-term trend, right, as we head back down, because now we're going to have all this wide open space that we've freed up. So wait for that new lower low, buy the bounce short term, sell the long term as we continue lower. We may get a chance here for a few easy buying opportunities right now. But again, just remember that the downward trend tells us the bottom can fall out any moment. So keep that stop nice and trailed. Keep the targets in sight, right? Be aware the top of that channel will make an excellent profit target. The 104.96 makes an excellent profit target. So keep an eye on that here going higher. All right, now that we've got that chart done, let's grab the 5-minute. 5-minute chart shows us a lot of clues here. First of all, we have a narrow range in the 5-minute chart. Second, look at the location of the previous low of day. We're right around that previous low of day. So we are hovering around those lows today. You can see the 104.01. That's the low of the London trading session. So I can see right away here, the London trading session is relatively narrow, 74 ticks wide. We can see that we are right around that previous low of day at 104.10, 104.18. Can't see exactly what that level is. Yep, 104.10. And we can also see not much of a clue here, but we're right near the previous week's open, right? Last week's open. This tells us that not much has changed in almost 2 weeks, right? So last week's Sunday night print was 104.61. Very, very important because now we can see we've gone up, we've gone down. We're right back where we began 2 Sundays ago, right? So a pretty big clue there in that previous week's open at 104.61. We can definitely read between the lines when we look at that. What's the most important thing in this chart? What do you think is the most important thing on this chart? In my opinion, it's the proximity to the previous low of day. The proximity to the previous low of day tells us the bears are definitely fighting for control. We get below the London lows at 104.01. We get below the previous low of day at 104.10. We're bearish. Like I said before, though, remember that bounce, right? Remember that channel that we're seeing here, right? We do have that bearish channel that we found. So remember, we're probably going to get that lower low bounce, lower low bounce, lower low bounce. So try to find those shorts as it re-enters the move going back down, right? That's going to be the best way to trade that. We always trade it like that, right? That's our typical scenario. We're never selling the lows. We're selling wave patterns or retracements after we get new lower lows. So if I had to guess this morning, I would say to the downside. But again, I'm suspicious about all that support that we found right here at 104 even. All right, so we'll have to wait and see what happens. I mean, in all reality, we may jump here after that major support holds. If we get news at 8:30, we may really jump, right? So we know we get a bunch of support at 104, so we might jump here. We definitely may jump. But at the same time, though, we know the best trading opportunities will likely come around that 104.50 area, and you can see it right here. Here's a 610 tick chart. This would be one of my entry charts. Love this time frame for crude oil. Wouldn't use this time frame for every market. Come see me in the trade room today, and I'll tell you all about it. Here we have a bear channel. Very easy to see that bearish channel. This channel we found earlier on that anchor chart. You can see the bear channel very, very easily. Inside of this, well, the bear channel tells us right away to sell retracements, right? The bear channel tells us the bears are in charge. Lower lows, lower highs. This is a huge clue. But there's also some bigger clues hidden inside of this channel. For example, if we're trying to get long, we've got resistance here at 104.49 and 104.76, right? If we're trying to get long, I've got support 103.70. So I've got an issue here going from low to high. I've got 104.49. That's resistance. 104.76. Boy, wouldn't that be a great spot to get short, right? My eyes and ears will definitely be focused on 104.76, guys. That will be an excellent spot to get short, right? It will. That's the top of that channel. You can also see here the symmetry support coming down, right? That symmetry support here, 103.70. So hidden under the hood here, hidden inside of this entry chart, we've got some pretty big clues. You can see we're going lower. You can see that right now we've got some resistance here at 104.50, which means I'm looking to sell 104.50. I'd really love to sell that 104.76, and I've got support to buy or take profit at 103.70 on the way down. Now, you know, guys, I always say I'm only one person's opinion. This is only some charts. I'm anxious to see and hear what Marty's going through here on the NYMEX floor, because, you know, at the end of the day, guys, the NYMEX trading floor is one of the busiest and one of the most important in the world. It really is. In the days of the dinosaurs where these trading pits are basically being extinct, the crude oil pit continues to provide us with great insight every day. I want to welcome Marty Errico from Traders Audio. Marty, how are you today, my friend? Great to have you here. Thanks for joining us. Happy Thursday. What are you seeing out there today, my friend?
Hello, hey, good morning. Happy Thursday to you. All right, well, it really comes down to this. It really depends where we open up today, and if it's below 104.15, it's below 104 even. We're back in that range from 102.5 up to 104. So if we're below 104.15, 104 even, then you got to sell. You can't fight the trend. So, okay, here's a couple charts here, guys. Again, I got a couple charts up here for you in a big way, and we're taking a look at the range from overnight. We're taking a look at the range from yesterday. Started off at looking at the floor chart, and look, here's the pit traded floor chart here, right? And it clearly shows that we have a downtrend here below, right, 104 even, right? You have this range from 102 to 104. So if we happen to break below and trade below this channel, right, this purple bullish channel, right, bearish channel, and the wedge, we get below, then we're going to be selling down. That's some support, 103.70, gets the S1 support pivot, and we can trade down to 102.5, right? So that's starting the day off and just really looking at it in that way. You see the same things kind of on the Globex chart as well, the wedge, the channel, okay, the 104 level being a very important level. So 104.15 and 104 even. Very important. Now, yes, you could buy these levels, and it could be a decent trade as you buy the low, but if we happen to all have an opening print in the pit session, 9 o'clock opening print, the pit session level, the opening range that I give you guys at 9 when the bell rings, if we happen to get below those levels, then we will be selling. Simple as that. If we could stay above where you have a strong open, then, you know, let's see how firm we are. At least in the pit, it's been a lot of paper selling. It was all paper selling yesterday. Locals basically have their bets in. They're pretty much long, so they're kind of scared now, a little nervous. They're on the brink of running some big stops around 104. That's why I say if we open up below 104, local stops will be run, the big stops on the screen will be run, and we'll be down below yesterday's settlement number as well, and opening below big round number. And again, it's the line in the sand for our ranges, right? It's a line in the sand for our ranges right here. Well, again, yesterday we did have a down day. HYPOTHETICAL and heating oil basically let us lower because of the builds and inventories that they had. So we experienced that multiple market divergence really working like a charm yesterday. And again, that's what caused the market to trade lower, because of the RBOB and heating oil, again, couldn't hold up. Crude couldn't stay firm, even though it had to draw on inventories. All right, let's look at our usual suspects as we do every single morning here on August 8th. We're looking at now your crude, RBOB, heating oil, Brent this morning, and we have sideways activity across the board until we breach one of our major outer extreme levels, and our lower extreme is going to be the 104.15, 104 even. So we are looking across the board at a very sideways market today. Looking over at the Brent crude, you can see Brent a touch lower as well, below actually the 107 handle at 106.95 again, so that Brent sideways to lower. If you look with me here, you'll see that we do also have our Brent WTI spread right now in just a little bit of a contingency. Again, we're in contango on the spread, so that's why the green arrow is there. Crack spreads are also pointing higher as well, as we're at the lower of our range. So kind of looking at our supply-demand differential and trying to get the evidence to see what trend we're going in. The spreads are telling us a little bit higher, buying the low of the range, all right? So we can rely on the spreads to give us that upwards indication. Our Brent's trading lower, and like I mentioned, our RBOB and heating oil and crude are sideways, giving us the two arrows that you see there and the sideways words right there. All right. Let's look at the dollar here today. Again, let's look at the risk-on, risk-off sentiment. We have your dollar, ladies and gentlemen, today a little bit lower now this morning, which would represent crude could possibly trade higher if that risk-on, risk-off sentiment is in play today. So how do we tell? Well, let's look. See Euro's higher, right? Dollar lower, Euro higher, Canadian higher. Okay, so yeah, we do have a risk on sentiment because we do have a lower dollar, we have a higher Euro, we have a higher cable, we got lower LIBOR, we have higher Canadian, higher British. So basically it's giving us that risk on sentiment here. Again, equity markets are going to be very important. This morning we have equity markets firm and holding higher, so that could possibly push crude higher. Again, watch those equity markets. This morning volatility is about 21 to 22%, so volatility still holding in there, but kind of low vol. Open interest as well, decreasing as we get a little bit of action in the OC contract here. Open interest I have on the other sheet, which I'll get out in just a second here, our level sheet. Open interest this morning, 282,824, and yesterday the open interest was in the 300 handle, so that's a big significant decrease in open interest, and that's something really that's obvious there. As you can see that we are now trading a little bit lower. Okay, let's get over to these levels here now, guys. Levels here for crude. Yesterday's high, 105.53. The low, 104.15. How important is that 104.15? Very important. Closing settlement number, 104.37. Daily pivot today, 104.68. Once again, I got 104.68, your daily pivot. A little bit of resistance above at 105.21, 106.80, 106.08, and 107.48. Support down below 103.83, 103.28, and 101.84. Also want to add in, that 102.57 level. Very important, 102 half level there, as we have to really keep an eye on that 102 half level. I'm just going to put 102 and a half in there. Very important level, guys. All right, implied volatility 22%, vol index 2280. As I mentioned, open interest decreased by about close to 20,000 contracts, and you can see a little bit of interest here in the puts, but not too much. Again, they actually shore up the downside in the options in a big way. They do actually show a lot of interest in the puts. Yesterday we were looking after inventories and we saw how they shored up the downside from 105 all the way down to 102.5. So they do put a little bit of money. They do price in the downside in the options. That is important to fact and know that we do have a lot of money in open outcry traded in the options that are to the downside. So very, very important there to consider that they price in the downside with the options, right? Okay, let's continue on here. Before we just take a look at those levels here, guys, on the natural gas, just want to show you guys natural gas. Today, what we have for you guys in the natural gas is going to be inventory number. There we go, inventory number on natural gas. And take a look. We have a expected forecast of 77 BCF. That's a positive 77 BCF. Now, if we get a greater than expected build in inventories, right? 80 BCF, 90 BCF will be bearish. So anything above 77 will be selling. If we get a lesser than expected build or a draw, we'll be buying. So anything above 77 we're selling, anything below 77 we're buying. So that's the natural gas right there, guys, and we're going to be taking a quick look over at your natural gas chart. And you can see we're at the lower end of our channel, right? We're looking at some heavy support. Now, the level to buy would be right here. 318 even. We'd love to buy 318 even. So if we get the build in inventories and we trade down to 318, I would love to buy that level and trade back within this channel and trade back up towards the higher end, up at 335, 325, 330 even. Okay? So that's what we're looking for in natural gas. We're going to be looking for a buying opportunity here, unless inventories tell us different, and then we'll go and buy that 318. And that's really about it. You see kind of the same thing in the floor chart. You can see the gaps between the 2 o'clock close and the 9 o'clock open, right? Gap lower from yesterday, now we're down below now our channel. And the floor chart kind of tells us a different thing opposed to the Globex chart. All right, levels for natural gas. Let me pick up those levels here on the natural gas. Excuse me. Levels on the natural gas, pit session high. I have 329.20. Once again, that's 329.20. Low, 323.90. Closing settlement number, 324.70. Daily pivot, 325.90. Guys got a little bit of resistance up above at 327.93, 31.20, and 336 half. Support down below, ladies and gentlemen, down at 322.60, 320.60, and 315.30. I also want to add in 318, guys. 318 is a very important level, and I want to keep an eye on that. So 318, I'm going to also add in. Alrighty, guys, again, those are your levels here for your crude, natural gas, and that's our game plan of attack for today. That's what's happening on the trading floor. So let's take a look here, guys. That's what's happening on the trading floor. I'm going to throw it back on over to JJ, but it looks like, hang on, let me see if I have any questions here. whatever. Okay, throw it back over to JJ.
I appreciate it, Marty. As always, thank you so much for coming in and joining us today. Thanks for braving those elements on the NYMEX exchange. Guys, a very important view here coming from the NYMEX exchange. We don't get this very often here, the ability to see through these charts and see what's happening on the trading floor. So thank you, Marty, for being here today. And as always, great to hear from you. I want to thank each and every one of you guys. Thank you guys for coming in and joining us here today, every morning at 7:30 a.m. Eastern Time. Don't forget to email us. Don't forget to email us. I want to know what your feedback is. I want to know what you guys like, what you guys don't like. Do you want to get an invitation to tomorrow's call? If you want to get a direct invitation for tomorrow's call and calls in the future, drop us an email, right? We'll send you over an invitation to come out and join us every morning at 7:30 a.m. Eastern Time. I'm JJ at School of Trade. That was my good friend Marty at Traders Audio. Don't forget to check him out every morning at 8:50 a.m., right, for his live broadcast right from the NYMEX exchange. All righty, time to rock and roll. Have a great trading day. We got Red Star News at 8:30. We've got a summertime Thursday, and we're on a 23-hour and 30-minute break. We'll see you back here same time, same place tomorrow for a summertime Friday edition of our Crude Oil Morning Prep. Have a wonderful day out there, folks. Remember to learn this stuff so you can earn with this stuff. We'll see you next time. Adios, amigos. Bye-bye for now.